This week's crypto recap. BlackRock files for another Ethereum spot ETF, while the community debunks a fake XRP application. Star Wars and Disney form a partnership to bring a new NFT platform to launch. And Tether not only buys Bitcoin, but now intends to mine more Bitcoin. We discuss all this right here and now with the Collective Shift team in our weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. As always, we'll start with the market update with Matt, followed by the BlackRock ETF news. So Matt, what did the markets do last week?
Yeah, it's had some new volatility in the markets, or some refound volatility after mostly a flat year. Prices seem to be going up and down quite on a daily basis, particularly in the last week. So really, when you look at it the past 7 days, the crypto market as a whole is basically flat. But within the market, you've seen definitely some outperformers and some sort of lagging coins and tokens. I'd say Ether is probably one of the highlights there in terms of one of the tokens that hasn't really done too much in the past month or so while this rally's been going. It's just been steady as she goes at about 2,000. Bitcoin is pleasingly sort of keeping and holding on to its gains that it really had a few weeks ago. That was the main thing I was looking for, whether it could hold above 32 and 33,000, which it looks like it's doing, which is giving me more confidence that we can go higher. And Solana, as we've been saying, continues to outperform. It's up 8% on the week, while most of the other majors are flat. And even just appetite for altcoins has really started to increase noticeably the past week, I would say, with Avalanche in particular a notable performer. So maybe the market getting ahead of itself a bit and trying to already front run maybe a bull run. That's something that I'm kind of thinking is what's playing out. I would like to see BTC and ETH go up a bit more before I'd be confident in sort of a prolonged rally. But yeah, it's definitely a lot more to report on these days than has been for the most part of this year.
Yeah, that's right. It's been nice to see this retained price action from Bitcoin after it's gone up a little bit, because people have been dying in crypto for a long time now, and to see these green candles, they're very, very happy.
Yeah.
Now let's go.
Sure. Sorry, Leon, just to add there, another thing we've been talking about, and it's been front of mind for me as well, is just whether new money is coming in and ways that we've been, why does that matter? If new money is coming in, it would, give us more confidence that the market is ready to get into a prolonged bull run. One thing that's, really probably reflecting against that, or suggesting that it's mostly just, the money within crypto, just maybe investing more with the cash they're earning, or maybe taking out leverage. One thing that is suggesting that is the case is the Bitcoin funding rate, which is up to, its highest levels around the time when it hit its all-time high back in November 2021, when Bitcoin was about 70,000. So again, it's just that appetite for, even leverage in this case, and people putting more bold bets on Bitcoin going up. And I would highly suggest that would be coming from people who are already in the market. So that's definitely one thing we are keeping our eye on for sure, is new money coming into the market. And if it isn't, I would suspect that we might be heading for a bit of a consolidation phase.
Yeah, that's right. And new money enters when the ETF does get approved. I think that's the biggest money that will enter whenever that does happen. And speaking of the ETFs, Matt, I know there is Nick, I'm sorry. I know there is an update on the Ethereum spot ETF. This is from BlackRock, is that right? They have a new application out, not Bitcoin this time, but it's Ethereum.
Yeah, BlackRock, one of the largest asset manager in the world, officially filed for a spot Ethereum ETF. And this came off the back of last week's announcement that they sort of registered an Ethereum trust, which led a lot of market pundits to speculate that the ETF spot application was pretty much coming. So not much of a shock considering the news that we talked about last week on the pod. But another sign that BlackRock is really not stopping at Bitcoin in their entry to supporting on-ramps into cryptocurrency and getting involved in the space. But they're really branching out and now looking not just Bitcoin, but now Ethereum and possibly a lot of other potential crypto assets if we see a similar route play out.
Now, Nick, I wanted to actually ask you about this because I'm not sure myself. So after a Bitcoin and Ethereum spot ETF goes live, what else is there? What else can the institutions possibly go to? You did speak about some other altcoins. I'm thinking Solana, possibly Chainlink. I just wanted to get your opinion, Nick, on what you think may be next on the list when it comes to spot big ETFs.
Yeah, it's interesting, and just putting it out there, like I would be very surprised to see an Ethereum spot ETF, come anytime, even next year. Like I'd be very shocked to see it come next year, considering how much trouble there's been to get the Bitcoin one, which hasn't even been approved yet. So just I've got to keep it in mind as well that these Bitcoin ones were going on for so long. We're finally getting the Ethereum ones, so I'm really anticipating a long road ahead, I guess, for Ethereum.
And not to mention as well the increased regulatory risk, which is the staking and all of the deflationary mechanisms around it. So like it viewed as a security. So I understand what you're saying. It's a long way out.
But to your point about what other cryptocurrencies could potentially, see a spot application next, I think the door's pretty wide open in terms of the things I'm looking for is which of the applications that are gaining actual traction on chain, the ones that perhaps are further along in their like decentralized journey, have been released longer, in a longer period of time, had a lot of battle testing, that adoption, real world partnerships. So things like Solana make sense when you think about, what Solana does and how long it's been around for and the adoption that it's starting to get. Then potentially even looking at things like Chainlink, as you mentioned, because, Chainlink is seen as the backbone of a lot of this, the crypto economy. But there's a lot of questions around like the link tokenomics, which I know we talk about all the time and about value accrual. So it's about which of the institutions are demanding for BlackRock to support as well. So I think it's a kind of wide open door, but probably Solana is probably in the first bracket there in terms of, its adoption and real usage and collaborations with, partners such as Visa, who are actually starting to use it as a settlement layer. So Solana may be on the way. That'd be a really big one though to see who they support next.
And I know there was a little bit of news regarding this with XRP and actually a fake kind of trust filing. It was kind of rumors for a little bit of time, but it ended up getting debunked. Is that right, Nick?
Yeah, there's never a dull day in crypto. So we saw XRP absolutely rocket higher on news that BlackRock was going to file a XRP trust, but it came out, hours later that this was filed actually in, not by the actual official parties. It was just somebody who did a filing and wrote down, the XRP founders and, the XRP Ripple the company. So I think the Delaware authorities come out and debunked it, and they're actually handed it off to the Justice Department to handle this because it's, basically market manipulation, because it moved the market considerably higher. And whoever did that would have capitalized pretty safely.
Yeah, that's crazy stuff. There's someone trying to take a gamble, trying to manipulate the market. Of course, the government's going to come after you. But yeah, that's it for the ETF news. Let's go on to a little bit more cheery news that more retailers would like. So Matt, I know people love Disney, people love Star Wars. There's been a new development in this space when it comes to NFTs. What's the recent update with Disney? They're always trying new things and they like experimenting with their IP, right?
Yeah, for sure. I think Disney over the years has had collaborations with other entities as well, and this is their next sort of step into it, and I would still classify it as another experiment. So what happened is that they agreed to license out their IP, so the likes of Star Wars, Pixar, different movies and whatnot, to create where Dapper Labs, so the team that's sort of behind the Flow blockchain and the likes of NBA Top Shots and whatnot, they are creating basically a new platform to sell these digital pins, which are basically like NFTs, and I think within sort of the Flow ecosystem, not yet transferable to other chains like Ethereum or whatnot. And it was also a good lesson even for retail investors out there. This widely got reported as a partnership, and then Disney came out a couple of days later just to clarify that they don't do partnerships. This was just a licensing agreement. So people being longer in the space might know Vivi. That was Disney license out their IP to Vivi, and they did some digital collectibles as well. And I would say this is my takeaway is it's good to see that Disney's still willing to do this to what are ultimately like NFT platforms and still, I would say, having a presence in the NFT space. So ultimately a great sign, because you need such large IP and recognizable IP, I think, to take NFTs to the next level. So we'll see what happens once this digital pin platform actually goes live.
Yeah, Matt, thanks for the distinction there between the partnerships, because this is what usually happens in crypto. A lot of people say,
a bull market.
Yeah, that's right. People say, oh, we have a partnership, but no, they're just using their IP. They're paying probably a licensing fee, for example. But it's not actually a partnership. So thank you very much for that distinction over there. So we'll look forward to this NFT marketplace. I mean, people love these collectibles when they come out. There are hardcore Disney fans, hardcore Star Wars fans, and they would definitely appreciate this. But of course, they are collectibles, so of course, do with it as you will. It's not investment, of course. Anyway, let's move on. Nick, I think we have some more news coming out in the banking sector, but this time coming from Germany. What's this got to do with crypto? What's happening in crypto in Germany with banks?
Yeah, thanks, Leon. This is something we actually did in our newsletter. I did a bit of a write-up about the movement towards, custody and banks really getting a lot of their licenses, their ducks in order to support digital assets and cryptocurrency. So this is only, a theme that's been going on for a while now, since about June. Now we're seeing two more big German banks. Hopefully I don't butcher the names too much, but one's Commerzbank Bank and another one is DZ Bank. And one of them has become sort of the first German full-service bank to be granted a crypto custody license. And then we saw another one, DZ Bank, which launched its own blockchain-based sort of digital asset platform. So these are two banks that are looking at supporting digital assets and cryptocurrencies. I know in their announcement post, they actually said something along the lines of, quote, they want to build up a broad range of digital asset services with particular emphasis on crypto assets. So there's a bit of a thing here where digital assets gets grouped together with like tokenization, but they've actually come out and explicitly talked about cryptocurrency and wanting to custody and provide crypto services. So this is a big theme I had from our, we talked on the pod last week about a few Australian banks looking at crypto custody such as NAB. So this is really what we're starting to see a trend of is, these big banks looking to get more involved in cryptocurrency and getting the proper licenses so they can do so. There was something called the MiCA, so it's really big legislation that recently passed and is kind of making its way through, and I think it's not going to go into full effect until 2025 or end of 2024. So all these German banks and a lot of others, there's a few ones out of France that are all just looking to custody cryptocurrency. So it's a huge deal because it just means that the onboarding experience could be considerably different to what it is now. When we think of, if you want to buy Bitcoin or, hold your cryptocurrency, you've got to go to an exchange and then you've got to hold it yourself. So we kind of thinking about this world in a couple of years where we may be living in where, you don't actually have to go to some weird crypto native exchange that you may not trust. You could probably do all this inside your own, the bank that you may use daily. So it could really shift the way that people access cryptocurrency.
Yeah, and I know for the listeners out there, I know we do cover American banking system pretty hefty on the podcast here, but please keep in mind, we also do keep an eye on the whole worldwide banking as well, and how that actually is affecting crypto and what they're doing in crypto, because America is not the only country out there. Other countries are experimenting with crypto. And as Nick said, it may be a time in the future where you don't need to go to some risky exchange. All you have to do is just load up your banking app and they can have Bitcoin in there for you, and you can go and transfer or exchange or do whatever you need to do your normal banking services. That's the evolution of a product if they want to still keep your business, right?
Yeah, crypto is hard as well to store. That's the number one takeaway I had writing that article is I just can't envision a world where everyone's writing their seed phrases down still. And, it is really hard. And quite frankly, I think a lot of people shouldn't actually be in charge of holding their seed phrase themselves. Like it's a daunting experience for a lot of people out there. I don't know, at OzCryptoCon, I had a lot of conversations with people who were still, really uncomfortable holding their cryptocurrency in self-custody.
Yeah, that's right. It's very difficult. And that fear of losing it when you're not cautious with it, that fear is going to paralyze you and you won't be able to do much with it. So yeah, there is a niche out there that these companies may be able to fill, which comes with the security. So yeah, we'll keep an eye on this. Now, Matt, let's move on, my friend. I know layer 2s are all the rage nowadays in crypto. We've got Arbitrum, we've got Optimism, ZK Sync, and 10 other layer 2s, Metis, etc. There is another one coming, isn't there? Which one is it this time, and who's building it, and why is it any different? Why should we care?
Yeah, Nick and I talked about this last week that it might be happening, and it came out a few days later that confirmed. So we've got OKX, one of the world's largest crypto exchanges. They are confirmed to be releasing a layer 2. They're calling it X1, and that is built with Polygon's CDK, or Chain Development Kit, and they're planning to launch this in Q1 next year. It's really another sign of this adoption. It's been one of the stories of 2023, really, is that being these layer 2s building out their own frameworks, really, or templates, if you will, for other projects or exchanges in this case to come out and spin up their own, I guess, layer 2, in some cases, layer 3, and build up their own networks, really, to then they can then do a lot more things from the design side of space and really optimize it for probably in OKX's chain, OKX's case, trying to then integrate it into their exchange, similar to what Coinbase has been doing with Base. And it's really been one of the stories of 2023 so far. A few notes here on OKX. Interestingly, they're using their OKB token as a native gas token for this X1 chain. That's always a bit of a debate going on. It's more utility, yes, for OKB, but if they can't, presuming they can't abstract that away, then it's likely going to create some user experience issues where, hey, if I want to use X1, now I'm going to have to go and buy some OKB token, which is just yet another step in the very, very long onboarding process that is already what we call just getting on board to crypto. Whereas a lot of these alternative L2s or Optimism, Arbitrum, even Base, you just have to use ETH as a native gas token, which at least makes it somewhat easier to sort of get started on it. So that was something I noted there, and a bit different to all the other ones. Like what Nick and I said last week, that looks like Kraken is getting ready to come out with their own L2. So to answer your question, Leon, of how many is too many, we obviously don't know that ahead of time, but I would say the main thing is I think we're going to continue to see more launch just because of the upside, right? I think everyone's looked at Base and seeing the revenue they're earning, as Nick said last week, and seeing how potentially lucrative it can be. Particularly, you got to think we're not in a raging bull market yet as well. I think that's definitely a big pull for these businesses. At the end of the day, they are businesses, these exchanges, and it will, I think, drive more people to more entities to start L2s, whether or not I highly suspect many of them will become sort of ghost chains in the coming, say 18 months, 24 months down the track, because like many L1s, I don't think they'll be able to materially differentiate and actually do something that's different, that has people interested in going there instead of the main L2s. That's something that I highly suspect will happen. It's just sort of, I guess, on an individual basis, you'd have to analyze each L2 and see, why are people using it and what are the purported benefits of it. So I expect 2024 again to be another huge year for L2s. It sort of has to be, right? Otherwise, I think Ethereum in particular will have really big issues. If the L2 narrative just goes away, it probably means Ethereum is sort of really, really struggling. So a really exciting space as we head into next year.
Yeah, Matt, I like what you were saying before about what differentiates them. It is very hard at times to actually see what makes something different, but it's just about the upside for them as a business. When you said that, what came to my mind was the KCS chain, which is the KuCoin chain. KuCoin is another exchange similar to OKX, right? Probably not as popular as OKX, but they have their own chain and nothing is happening on there at all. So for me, I take that case example. Oh, okay. Is it any different at all? Maybe not really. Maybe they have, something cool on the chain to do. Apart from that, nah, let's wait and see whatever the developers are going to feel on there. Yeah. All right. Now let's go on. Nick, my friend, there is even more news coming out from some of the largest institutions in the world who are dabbling and continue to keep experimenting in crypto. This is about JPMorgan doing some tests for tokenized portfolios with Avalanche on the Avalanche blockchain. So tell us what's happening with JPM chain. Is it going ahead? Is it experimentation? What are they doing now? Every week they're in the news.
Yeah, so JPMorgan have a wide range of different blockchain-based services and divisions that they're looking at, because they've actually been one of the strongest components of using blockchain, but just in a private way. This actual test is looking at doing it not just in their own private blockchain, but using public blockchains in a permissioned way. This is kind of an oxymoron when you think of public but permissions, but this is why they've used Avalanche. So to rewind, their Onyx division teamed up with Apollo Global, and they're working on something called Project Guardian, and this was actually in tandem with the Monetary Authority of Singapore. So this is a proof of concept of using permissioned public blockchains, to tokenize sort of the asset management industry. They've identified this as like, a $5 trillion industry, and they're working at, how do we bring some of this wealth on chain, and how do we sort of work out permissions and allow everyone to interact, and bring all these different sort of assets on chain. So they're working with Avalanche, another crypto native crypto company, which is LayerZero, and a few others, on this initiative. So essentially at a high level, what JPMorgan are doing here is that they're allowing LayerZero to connect their Onyx digital platform and the digital asset division to an Avalanche subnet. This is just a branch of Avalanche which you can create your own custom applications on, and you can sort of have greater authority of who uses it and who doesn't. So not everybody can use it if you don't want them to. It's sort of at the discretion of who's created it. And so they're teaming up with another asset manager, Wisdom Tree, to tokenize some on-chain funds. So really big, I think, step forward in this proof of concept. And I'd be really interested to see whether they continue down this same route. I know Avalanche ticked up, I think, 10 to 15% higher in the news, that they were testing their subnets.
Yeah, I did see that nice green candle on Avalanche myself, but from the end of the day, for me, this is still an experiment, Nick. They're just testing things out. Nothing's actually cemented, so I want to wait until something official does actually come out before I see some really nice price action and it'd be justified. So yeah, it's good to see experimentation in this space all the same. We're happy to have it. Welcome aboard, JPMorgan. You guys have been here for a while. You'll still be here for a long time. Matt, let's keep going, my friend. Tether now wants to do Bitcoin mining. I know they, if I remember correctly, they like to secure their reservoirs with some Bitcoin itself. They were purchasing Bitcoins of profits in their company, but now they want to take a step forward and actually go and mine more Bitcoin. Is that right?
Yeah, so looking at reports coming out last week that they're looking at investing more into Bitcoin mining facilities, this time in South America. And the CEO coming out there as well that they're wanting to get up to 1% of the basically what's called the hash rate, or basically the amount of computing energy, if you will, going into the Bitcoin network. So I think the last few years really we've seen a big sort of diversification from a geographical standpoint of Bitcoin mining. When I first saw this, my mind went to how powerful is the likes of Tether going to become. But when I saw that their ambitions are still just to get 1% of the mining overall hash rate, like that's still very, very okay and not too much of an issue in my opinion. We've seen this year they've used a lot of their profits to buy Bitcoin for their balance sheet, but again, it's not really a material amount. So it's great to see Tether sort of reinvesting some of their profits, of which they've had a lot in this high interest rate environment, and moving more importantly into South America again, continuing that trend of just geographical diversification of Bitcoin mining, which is extremely important when you look at the potential attack vectors for Bitcoin. One of them, a really good defense to that, is having miners spread all around the world. So yeah, great to see there from Tether if those reports are true, and I think in the next 6 months or so they'll continue to construct them according to these reports from Bloomberg.
Yeah, Tether is still that little black sheep in the black dog in the crypto community. We're not sure about the reserves. We're not sure about the entire company, if it's backed or not. but people continue to use it and they are continuing to support the ecosystem. So far, people are still quite happy with them. We'll have to see how this ends up turning out, because we know from last time there was another company called Luna that tried to back their coin with stablecoin with Bitcoin, and it didn't go too well. But that was a totally different kind of situation. Now, let's move on. Nick, I know you did recently catch DevCon. Did you have any highlights that you wanted to share with the community, with the podcast? Anything happening at DevCon this time?
Yeah, thanks, Leo. I think the major takeaway was grouping together of trying to decentralize Ethereum's core infrastructure even more. We all know that Ethereum's one of its biggest knocks is that potentially there's some parts that are centralized, such as Consensus, which is one of the largest Ethereum related crypto companies. One of the core infrastructure that powers a lot of this stuff is Infra, and so this was controlled originally by Consensus, one of the largest companies. So they've been working, I think, for the past year on ways to decentralize some of this core infrastructure. So at DevCon, they just announced that they may be teaming up with Microsoft, Tencent, a few big tech names to create this sort of federated group of companies that help sort of control infra and some core Ethereum infrastructure. So this is a long way to go. It's only a starting point, but hopefully we can start to see some of Ethereum's core infrastructure start to gradually decentralize. I know they talked about potentially having a token for this, and I think it's only going to play out again in 2024 as a lot of these central points of failure and a lot of these centralization vectors hopefully start to be decentralized.
Yeah, that's right. And it brings to mind what Vitalik was saying before, where Ethereum is not yet complete. It's probably about 50%. So they're still building, they're still experimenting in this space. So it's good to see that big tech are being invited to come and at least decentralize the infrastructure network of Ethereum. And then, of course, that'll make it stronger for the rest of us to use as retailers on the chain. All right, my friends, let's go to the last section of the podcast where we share in the market in the last week what we feel was underappreciated or overappreciated. I'll go last as always. We'll let Matt go first. Matt, what did you appreciate or not appreciate in the market this week?
Yeah, one for me was the Pyth network. So it's basically an Oracle network, very similar to Chainlink, to really oversimplify it. They're going to be, or they already are, the second biggest Oracle, only behind Chainlink. So they're actually tokenizing. So they're getting ready to do their airdrop. It was announced a few weeks ago, but I think notably, I think a lot of people missed. So I would say it's underappreciated. A lot of people missed a few days ago. They actually announced that they are expanding the eligibility criteria. So yeah, you can, if you maybe went and checked if you're eligible for an airdrop, call it a month ago, and you weren't eligible, I would strongly suggest going back to see with these new expanded criteria whether you are eligible. So the claims do open on November 20th, and they are open for 90 days. Very important there. So 90 days can really get away from you if you put it off. And I know a lot of people, for the Celestia one, which was only about a 20 or 30 day limit, that has unfortunately, for those people who missed it, that has rocketed up in price. So not saying it will happen with Pyth, obviously, but always a lesson there for limited airdrop claims, really just to get on top of it as soon as possible. Yeah. And always, like with any airdrop, before I hand it over to Nick, just be aware of scams and phishing links. It's always the best time for any scammers. Unfortunately, they have a lot of success around the time of airdrops because of how complacent people can get and excited people can get. So just be very aware of a lot more uprise in activity around phishes and scams related to this Pyth airdrop.
Yep, as always, be very careful. Check out our security center. Check out our airdrops guide if you're interested in further airdrops in the Collective Shift community. Nick, mate, what did you have underappreciated or overappreciated in the market this week?
I have Argentina's new president. I was actually looking like that. He was a pro Bitcoin president. I actually didn't think he was going to get in. It looked, from a lot of the reports a couple of months ago, but just looking at the last couple of days, it looks like that, he's confirmed he's going to, he's won the presidency, and he's a notorious pro Bitcoin candidate. But more so, he's actually looking at really shaking up the Argentine economy. So instead of using, their own, currency, they're looking at potentially shifting. And this is a major part of his platform, was to shift towards the US dollar and sort of disbands, the central bank who's really failed, Argentine for so long. So really interested to see if this is a case study of potentially what we're going to start to see with a lot of currency out there that is beginning to be traded off for US dollars. I wonder if anyone else follows this similar route, and I also wonder whether if you may be a sneaky chance to become the second country to make crypto or Bitcoin legal tender.
Yeah, that's right. Maybe we might have a second Nayib Bukele as a president and helping spur Bitcoin development and Bitcoin adoption as well in the country. So this is definitely good news, I would say. I'm super surprised that pro-Bitcoin president exists now, which is crazy, right? You don't hear that very often. Thanks for sharing that, Nick. And I think my last thing, just before we cap off the podcast, what I underappreciated in the market this week, or what I feel is underappreciated, is the relief in the market, my friends. Don't tell me you're not relieved seeing all the green candles, actually, not the red, all the green candles in crypto this time. Some people are saying we're just at the start of the next bull run, but I want you to keep stock of what you have. We have about 130 days till the next Bitcoin halving. History doesn't repeat, but it does rhyme. Usually there is a bull market around that time. So make sure now is the time. Set your goals. Make sure if you haven't, you go and write them down. We have a document over in the Collective Shift platform, and do not make the same mistakes that you made in the last bull cycle, right? This is the time to perform better. So I appreciate the green sentiment in the market now. And as you can see, people are still pretty happy in crypto. And I hope you have made some profit so far. That's a wrap for this week, my friends. If you're looking for more insights, check out our weekly revamped Collective Shift newsletter, providing free market insights every Friday, my friends. Subscribe at collectiveshift.io/newsletter. collectiveshift.io/newsletter. We will see you next week, guys. Bye for now.